CrowdStrike, earnings are out. At first glance, looks pretty strong. The stock is down. What's going on? This video is going to break it down. Everything you need to know about CrowdStrike's recent earnings report. We'll cover the highlights. We'll look at valuation. We'll look at the growth metrics. We'll even look at a chart, and I'll tell you where I think the stock is headed next. Let's get after it. All right, the stock is down about 2%, but of course, I like perspective, and I think you do too. So let's get some perspective on this. Now, in the past month, the stock is up 21.61% headed into earnings. So a huge rip into this earnings report. In the last 6 months, the stock is up 34% before earnings. And year to date, the stock is up 105.61% before this report. Now, the interesting part about that stat, this is showing 105.61% year to date, but that's using January 3rd at $103.28 as that start. If you remember in January, and sometimes our memories are short, growth stocks like CrowdStrike actually sold off the first few days of January. So looking at January 6th, this stock was $94.72. So of course you bought it at $95, it's up even more than 105%. And of course, a lot of you are new investors, but just for fun, looking at this, $39.55. This is March 13th of 2020. Now I am a shareholder of CrowdStrike. I'm long. My cost basis is under $100. We covered CrowdStrike just about 3 weeks ago saying we liked it under $150 a share. Now here it is back over $200. Where's it going next? What's going on with earnings? So market cap right now is about $50 billion, and this is showing a forward PE ratio of about 74. I did some quick napkin math. It's a little bit lower than this. It's probably around 70 if you use the guidance. So Q3 non-GAAP EPS of 82 cents, beat by 8 cents. Revenue, $786 million. That's up 35.3% year over year, beat by $8.62 million. The annual recurring revenue, that ARR, surpassed $3 billion, growing 35% year over year, and it's at $3.15 billion. Now remember, CrowdStrike is built in the cloud for the cloud. This is a SaaS company, software as a service, so it has recurring revenue. And you value these type of companies differently. In fact, just on Seeking Alpha, before I started recording here, somebody commented about a high P ratio. And my response was, a stock like this, you don't want to look just at P ratio. And if you're a value investor, these type of stocks probably just aren't for you. And that's okay. There's nothing wrong with that. But it's important to understand that annual recurring revenue, think about that for a second. If you're a business and say you're a plumbing company, you have to go out and get new business, find new toilets to fix, new faucets to fix every single week, every single month, every single quarter. With recurring revenue, you keep the clients happy. And there is some churn there, but oftentimes with these SaaS companies, they're actually expanding their footprint and they're keeping their customers happy. Not only keeping them happy, but having those customers expand the footprint and buy more products and modules. And there's some big news here, recent development in the SMB space I'll cover. You'll want to see this, and it will impact, I think, SentinelOne. So record net new ARR of $223 million, driven by accelerating year-over-year growth. And the guidance is solid. Q4 revenue, so their guidance here, 836.6 to 840 million, and the consensus, 836.8 million. So pretty solid. Zscaler just reported earnings yesterday. Stock was down on guidance, but it's another one of those companies the stock has ripped since January. And then non-GAAP EPS of 81 to 82 cents, and that's higher than the consensus estimate of 78 cents. And then you got full year total revenue, 3.046 to 3.05 billion, and that's a beat too. It's basically a beat on the top and bottom and a raise. You've got a consensus here of 3.04. So it could come in on the light end, but they're saying maybe a little bit higher. And then non-GAAP EPS, they're saying 295 to 296, and that's quite a bit higher than the consensus of $2.83. So this is straight from CrowdStrike's investor relations homepage. We talked about that $3 billion milestone, growing 35%. That's big. And the record net new ARR, also big, 223 million. Delivers record profitability on top of it. So this company is still growing at a nice clip. Profitability is actually improving. Also achieved record Q3 cash flow from operations and record free cash flow. That's what this type of economy, that's what the market wants to see. In this type of environment, you want to see companies that have growth, but also have that strong free cash flow, strong balance sheet, and so on. So a quote here from CEO George Kurtz, one of my favorite CEOs. If you're not familiar with CrowdStrike, we have several videos on the channel. Essentially, CrowdStrike CrowdStrike is going to be best of breed or best in breed cybersecurity focused on endpoint security. And Kurt said CrowdStrike's record third quarter exceeded expectations, delivering new milestones across the business. Net new ARR growth accelerated to a record $223 million, and ending ARR surpassed $3 billion, making CrowdStrike the fastest and only pure play cybersecurity software vendor in history to achieve this milestone. Our single platform architecture and unique data advantage unite security and IT teams in solving cybersecurity's mission critical challenges, driving increased win rates and record pipeline. Customers increasingly trust the AI native Falcon XDR platform as their cybersecurity consolidator of choice. So big earnings here. The stock is ripped. We'll look closer at valuation and a chart here in a minute. GAAP subscription gross margin, 78%. That's the other thing with these SaaS companies, really high gross margins. And we think of these SaaS companies, they've been in that hyper growth mode. We talk about the life cycle of a business going from spec to hyper growth to growth, mature growth, DGIF, DGI, and income. And you think of CrowdStrike, it's really graduated, I guess, from that hyper growth more into a growth type company. And you look at the spectrum, it's in between the two. It still has solid growth, but it's closer to a growth stock than it is hyper growth. And that profitability is continuing to improve. So if you look at cash flow, net cash generated from operations, $273.5 million. Now that's $242.9 million if you compare it to the third quarter of fiscal 2023. And free cash flow, $239 million. And that's compared to $174.1 million in the third quarter of fiscal 2023. So nice improvement there. And another thing that's huge with what I call these tier one SaaS type companies, cash and cash equivalents, $3.17 billion of cash. Plus it has positive free cash flow. You don't have to worry so much about this type of company going out of business. You think of those spec stocks, they're burning cash. They don't have a ton of cash on the balance sheet, and it's much more of a risk in this type of environment. So CrowdStrike's module adoption, this is important. We talk about net-based dollar retention, keeping those customers happy and expanding the footprint so they spend more money with CrowdStrike and its products. So the module adoption rates, you got 63%, 42%, and 26%. And that's for 5, 6, and 7 modules respectively. Couple big things here. This is huge. So became the first cybersecurity independent software vendor, ISV, founded for the cloud, so built in the cloud, for the cloud, to exceed $1 billion of software sales through Amazon AWS Marketplace. And to piggyback on that, they just announced just a few days ago a new release of CrowdStrike Falcon Go, delivering the cybersecurity protection. Basically what this is, it's for SMB, small and mid-sized companies. So these businesses don't have large IT teams. They don't have the time or the ability to get into the weeds and be complex. So this is going to be a plug and play type of a subscription they can get right off of Amazon if you're a small to mid-sized business. And this is the press release right here from November 22nd. So CrowdStrike's AI-powered cybersecurity offering for small and medium businesses, CrowdStrike Falcon Go, is now officially available on Amazon Business, designed to help small and mid-sized businesses, SMBs, defend their operations from modern cybersecurity threats. So this is an intuitive, simplified package for smaller IT teams and non-technical users. This is a good quote here on the screen, and you can read it if you'd like. I want to talk about how this impacts something like SentinelOne. Now, I've done several different comparison videos on the channel here comparing CrowdStrike to SentinelOne, and I've gotten a lot of heat for it because back in, say, 2021, when everybody said, SentinelOne's the next big thing, it's AI, CrowdStrike's garbage, everybody wanted to throw CrowdStrike away and buy SentinelOne. Now, if you zoom the lens out, if you stuck with CrowdStrike, had conviction, and understood the business and the model, well, you did pretty well. SentinelOne stock is still not doing great. Of course, if you bought it at the right time, but if you bought it in 2021, CrowdStrike's doing much better when you compare those two charts. Now, we talk about SentinelOne, they're focused on SMB. And we've talked about how the total addressable market is huge and how CrowdStrike's really focused on enterprise. So when we say enterprise, that's B2B, focusing on companies that have 1,000 employees or more. That's generally what enterprise means. And really, when you look at CrowdStrike, they're focused on the biggest fish in the sea. So they're going after like the global 1,500 and things like that. Now, with this new product, it's kind of a plug and play deal. They essentially do everything through the cloud. They load it up into Amazon Business. And this is a really easy It's a simple and strong offering that's going to compete even more against something like a SentinelOne. Now, we do own both SentinelOne and CrowdStrike in the Fired Up Wealth community portfolio. In my primary brokerage, my $1.5 million plus taxable growth portfolio, I only own CrowdStrike. And honestly, I don't have as much conviction in SentinelOne, but I do think it can still do okay. But this is something really important to note if you're an investor, because my conviction was already higher on CrowdStrike. And when I see something like this, it should concern you a little bit if you're really bullish on SentinelOne, especially if you don't own CrowdStrike. And CrowdStrike is partnering with Amazon, in fact, winning several different awards here just at this AWS reInvent conference a few days ago. Public Sector Partner of the Year, State and Local Government Partner of the Year, and Nonprofit Organization Partner of the Year. And I said in Discord earlier, I love it when the companies I own, I own stocks in both Amazon and CrowdStrike, so I'm a shareholder. When you own shares of a company, you own part of a business. I love it when the businesses that I have conviction in, that I own, when they collaborate and they are successful together. So you think of like NVIDIA and Snowflake and CrowdStrike and Amazon and all these big companies that are enterprise focused, especially when you think of generative AI and just AI in general for business. They're partnering in so many different capacities. So I look at my top 30 holdings and I look what's in there, and it's exciting to see, news reports like this on investor relations talking about how CrowdStrike and Amazon are working together on new products, how, CrowdStrike's winning awards at AWS partner events and so on. So CrowdStrike also unveiled a series of new offerings during the 7th annual Falcon cybersecurity conference. So that included data protection, exposure management, IT automation, also a couple different acquisitions to help in other areas. So constantly improving the catalog, the services available, so they can continue to expand that footprint and that net-based retention. Here's an example: Bionic, pioneer of application security posture management, ASPM. So go Google that if you're interested in knowing more about that. Extending CrowdStrike's leading cloud-native application protection platform with ASPM to deliver comprehensive risk visibility and protection across the entire cloud estate. So we talk about companies like Datadog, how they're expanding more into cybersecurity. And then you look at cybersecurity companies, this is historically been laser focused on endpoint security, but it's expanding that footprint because the modern business has more needs than that, right? And there's money to be made. Once you have that relationship, you can build new products, acquire other companies, expand that footprint. Named a leader again in the Forrester Wave for endpoint security, positioned as a leader in IDC MarketScape, recognized as customer's choice, one of the highest rated for the Gartner Peer Insights. And this is for the voice of customer for endpoint protection platform and several others. Basically when you look at best in breed, CrowdStrike is the best if you're looking for a pure play cybersecurity endpoint. You've got, SentinelOne, but it's much more focused on SMB, even though they're trying to get more into enterprise. CrowdStrike has their tentacles already there. You know what I'm saying? They've got those relationships. They're already working with so many different customers. I could show you some different slides, it's Fortune 500 and the Global 1000 and so on. Then you got Microsoft. Of course, Microsoft has its hands in so many different pots, but Microsoft is going to be a leader as well in cybersecurity and specifically in endpoint security. But we've showed videos on the channel, SentinelOne CEO basically telling CNBC that SentinelOne's having a hard time competing with Microsoft. Now, I'm not going to say that CrowdStrike wins every time against Microsoft, but the message you hear from leadership, if you're watching some of the videos I've done, generally is that they'll actually go to Microsoft customers and be that white knight to basically fix a mess. You're not seeing those same reports from SentinelOne. The thing about AI, a lot of companies are starting to use the word AI to get attention, to ride that hype train. The reality is CrowdStrike has been involved in AI really since inception, going all the way back to 2011. You can see on your screen here. And now they've got Charlotte AI, which is generative AI for enterprise. But going back to 2011, pioneered EDR, fueling AI revolution. This is the Falcon platform. And you can see that evolution of the business and how they keep adding products and continuously evolving and pivoting, staying in front. You think about cybersecurity, and I've talked about this too. I like this company a lot, but as an investor, you got to look at the potential threats. What does it look like when quantum computing is easily accessible? What happens when Chinese hackers and Russian hackers and North Korean hackers, what happens when they have quantum computing? What does cybersecurity look like at that point? And that's something, and this is why I don't go and put 10 or 20% of my portfolio in one stock. I like CrowdStrike, it's a top holding. It might be, 2 or 3%. And you say, well, that's not a lot of money. When you got a $1.5 million portfolio, it is. $10,000 to me is a lot of money. I come from, pretty humble beginnings, and I'm not, part of investing is also a risk management. So I like to invest in many different companies that I have high conviction in, that have research, and make money on those. That's just the way I do it. Some people like to put 20% of their portfolio in CrowdStrike, but with risk, there's reward. And with reward, there's risk. So for me, I've already made decent money. And part of my job now is preservation. So I'm not going to put, 10%, 20% of my portfolio in a stock like this, but I do have high conviction. And if you look at things outside of those mega cap tech stocks, back in 2022, I talked about how the market would go to the Microsofts and the Googles and the Amazons first. And the next would be the CrowdStrikes, the Datadogs, the Zscalers. And that's exactly what's unfolded over the last 12 months. And this is the CrowdStrike platform. So if you're not familiar, at the very bottom, you got the CrowdStrike Data Fabric. And then you've got the CrowdStrike Security Cloud, and you can see everything that flows up into that. So endpoint security in that far left, but then you have like cloud security and threat intelligence, identity protection, security and IT ops, observability, managed services. So again, as I mentioned earlier, a lot of these companies are starting to bleed into other areas. The ones that have strong reputation and relationships, they're going to continue to thrive, continue to grow, continue to expand. Now, to piggyback off of that, I'm not suggesting that you go buy the stock because of this, and you have to take it with a grain of salt when it's in an investor deck like this, but long-term TAM evolution. IPO in 2019, they said that their total addressable market, $25 billion. Zoom the lens out, potential TAM, including planned offerings. So again, continuing to design, develop, build new offerings, expand the footprint. So potential TAM in calendar year 2026, $58 billion. So it goes from 25 billion to 76, 98, 158 billion. You can see the organic TAM, the product roadmap, future initiatives, and then cloud security opportunity. Okay, this is on Seeking Alpha. And if you're interested in signing up for Seeking Alpha Premium, I do have a deal, a Black Friday deal they've extended. Check out the link below. It's also pinned in the comments. No pressure, just check it out. I'm an affiliate. If you're gonna sign up anyway, you might as well sign up and use my link. I basically get a couple bucks back, and I appreciate the support. Look at how CrowdStrike here on the growth. We saw earlier 35% year over year at 3.15 billion. Looking at this, it's showing 44% on Seeking Alpha. This is under the growth tab. And the forward, 39%. So it's a little bit less than that. So give or take, 35 to 39% in that range. But looking at the numbers, A plus. All right. Now, oftentimes when you have an A plus growth, you're not going to have very good metrics when you look at profitability. But with CrowdStrike, profitability is actually an A minus. So if you look at the profit margin, 74% here on Seeking Alpha, these numbers are pretty strong, especially for the growth. Now looking at valuation, it's going to show a D. The problem is, and we talk about this, if you're a growth investor, be careful of that trap of overemphasizing the PE ratio. The PE ratio is one tool in a tool belt, but it should not be used by itself, especially on a company like CrowdStrike. But the forward is about 70. This is showing 74. So between 70 and 74 after this recent earnings report. Now, this number to me is interesting. This is a non-GAAP. This is a forward peg on the non-GAAP, 1.64. Now, of course, you talk about, one or less in the peg ratio, it's getting pretty attractive. But generally, when you see 1.64, you're not seeing 35 and 40% growth either, especially in a business that has recurring revenue. And again, this is why it's so important as an investor to understand so many things. You have to understand the company, but you also have to understand the sector. You have to understand what the competition is, the type of margin profile. Is the revenue something where they have to go out and go to bat every single quarter for new revenue, or is it recurring? Because that does make a difference. So is CrowdStrike a cheap stock? Well, of course, again, if you're a value investor, this simply just probably isn't a stock for you. If you're a growth investor and you understand the secular growth trend of cybersecurity, you understand the leadership position, the leadership team, the competition, everything you need to know, all that due diligence that you need to know about a company, you know that CrowdStrike is positioned very well. Now, in investing, there are no guarantees. Talked earlier about how I like to have many different stocks to kind of hedge it versus just putting all my eggs in one basket. What you do with your money is completely up to you. So is CrowdStrike a buy? at $210 or whatever it's trading at right now. We'll look at a chart here in a second. I think it's important to understand if you have conviction in these type of companies, you're buying them when they're on sale. If you look at our Discord community, this is a stock we always said, don't overpay for it. Same with Cloudflare, same with all those different SaaS companies, Datadog, Zscaler. We have certain price points that we're willing to pay. When they get above them, we just have to kind of sit back and chill a little bit. If you're a new investor, it can be really hard because you're like, well, I want to own the stocks that Eric owns, and I want to own the stocks that so-and-so owns, and I want to build a portfolio this way. Now, if you have the financial education and the true discipline and psychology that's required to simply buy a stock and hold it for 5 years and not stare at it all day. So many of us stare at our portfolios all day. If you have a pot of water and it's on a stove and you're trying to boil it, if you stare at that water, will it boil any faster? Of course, the answer is no. Yet we look at our portfolios every day. We look at the movement of a stock every day, like a CrowdStrike, and say, "Oh no, it's up 2%. It's down 2%. Oh no, it's up 5%. It's down. What should I sell? Should I buy?" If you understand the business, if you have a plan, if you have an actual blueprint methodology that we teach in Fired Up Wealth Masterclass, we got a deal right now. Sign up for annual Elite Plus Masterclass. We have 16 videos right now. Another one coming this week for 17. Another one December. There'll be 18 videos. 20 hours of premium content teaching you everything you need to know from investing A to Z. If you have that type of education, you've got that background. I've been doing this 25 years and I've made a lot of mistakes along the way and I've learned what to do and what not to do. This is basically, if I'm teaching my 20-year-old self what to do to be successful in the stock market, this is why I created this video series on Patreon. You can check it out. Go to patreon.com/firedupwealth. If you sign up for the annual membership, you get a 1-hour mentoring session with me. Now, there's no pressure. If you don't want to do that, it's totally fine. If you just want to watch YouTube videos, no problem. If you want to learn this stuff and support what I'm trying to do with financial education, teaching people how to be better investors, then sign up. It's as simple as that. I know not everybody's in the position to do so. If you are, definitely welcome you, encourage you to do that. But if you have that background, that education, and you can hold a stock and not worry about the ups and downs, you probably do okay with a lot of these names we talk about. The problem is when the stock is up 100% year to date, when the market sells off, a lot of other people own the stock at a lower price and they can sell it from underneath you. So what happens is with retail investors, and I'm a retail investor myself, individual investor, we get excited about these stocks when they're running hot, when they're going higher and they're going up every day. And then it gets our attention. A lot of people are kind of casual investors. The market's up, they buy stuff. A lot of people are traders, so they're buying momentum. And then when the market's selling off, nobody wants to touch anything. We call it FOMO and full. Fear of missing out. Market's going up every day. Our CrowdStrike's going up every day. And then full. When the stock is, $95, not many people want to buy it because it's going to go to $75. You hear the story over and over. And now you look back and say, why didn't I buy, CrowdStrike at $100? Now it's over $200. Should I buy it now, Eric? I was a new investor. I missed it, or I thought it was going to go lower. I didn't know enough about the company then. You have to just be really careful of chasing. And sometimes you have to build a watch list and prices, and you buy the stocks that come to you. And we talk about core positions. If it's a core position, you absolutely have to own it for the portfolio, the blueprint you design. Well, that might be a different story, but that means you're going to have conviction in it too, and you're not going to stress out as much if it goes to $150 again. But if you don't know about the company, you don't have financial education, you go put everything in one stock, you got $5,000, you throw it all in CrowdStrike at 200 because you see a YouTube video that says it might go to 250, you're setting yourself up for failure, right? If you're building a portfolio using a methodology and you're not putting all your eggs in one basket and you're using dollar cost averaging, completely different game. Investors and traders, it's like oil and water, completely different. And I had this conversation, over Thanksgiving. Somebody basically said, investing's the same as gambling. Like, no, trading, meme stocks might be closer to gambling, but investing and trading are completely different. And investing and gambling are completely different. They're not. And I'm in Masterclass 17, I'm going to explain the reasons why they're different and give you a deeper dive on that. But let's look at a chart here at CrowdStrike, see where it's come from and where it might go next. All right, so the first thing I want to point out here, this is just on TradingView. The relative strength index, 74.46. You know the story here, 0 to 100. If it's 30 or less, typically oversold, 70 or above, typically overbought. So basically we're getting into overbought territory heading in earnings, plus the stock's up over 100% year to date. So does it make sense that right now it's down, 0.88%? Google's showing 0.88%. So it's basically flat. It's $210.48. But here's the thing. You could have bought it at $94, $105, $115, $131. Here it is at $117 in May. You could have bought it recently here, $159 where we liked it. Back at this period, we said 150 or less DCA, and you had plenty of time in that 150 range to buy it under $150, basically from end of May all the way to early September, essentially. You had the opportunity to buy it in that $150 or less range DCA. So right now the stock, it could consolidate and then go higher. I think on the upside, maybe 220 to 240, but you have to be careful chasing. If you look at this is chart day. We do, chart day every single Wednesday, Patreon Discord. Orange is a previous chart day. Yellow is today's chart day. I wrote this up here just a couple minutes ago just to tell you my thoughts. But we do live streams every Monday, Wednesday, and Friday at 9 o'clock a.m. Eastern. And those are live, but they're recorded and posted on Patreon. Every Wednesday is chart day. We cover QQQ and 20 individual tickers chosen by the community. So all this orange here, basically previous chart days where we talked about the stock. And you can see, we talked about in a bear market, it could go down to these. We said possibilities. This is back in July of 2022. I said to the gang, I won't be surprised. And at the time, the stock was $200. And I said, looking at some of these setups, if the market sells off again, don't be surprised if you see this stock under $100. And I had ranges all the way down. Worst case scenario, if the market completely fell out, $70. And you look at that when it's 200 and say, there's no way that's going to happen. You probably think the same thing right now. Well, there's no way something like that's going to happen. The thing is when the market decides to tank, you go into a bear market, stocks always go higher than you think they will on the upside. They always go lower than you think they will on the downside. Right now, we're in bull mode. And this is where it's hard. I like buying in bear mode. That's where wealth is accumulated when you buy down here. Buying up here, can you make money if you hold it for 5 or 10 years? I think you will, but you're going to have volatility. It's not going to be a straight line up. And so many people want to buy a stock and just have it green every day for the rest of your life. You're going to stare at it every single day. All right, I bought some CrowdStrike. It's going to make me a millionaire. At this point, no, and that's not how it's going to work, right? It's going to have volatility up, down, and sideways, and over time, it's going to grind higher. So if you're really focused on basically trading, if you're in that mindset, you're going to stare at your portfolio all day, then you want to buy on the momentum here, not here. So not everybody's going to time this perfectly, and I certainly don't time the bottoms perfectly. I'll DCA up here, DCA until I'm out of cash, and then buy a little bit on the other side when I replenish some cash. But I look at my positions, generally works out pretty nicely, very green. CrowdStrike, last time I checked, is still under $100 on the cost basis, so doing just fine on CrowdStrike. If you buy it here, be careful chasing. I think in the upside, 220 to 240. A lot of you saying, well, I want to buy it. I want to buy it on a pullback. This is what I hear every day now. Down here, I say, I like these prices, DCA 150 or less. And then I hear, well, it's going to go to $80. The Fed's going to raise rates. You hear the story over and over. Everybody, fear of losing everything. Nobody wants to talk about buying when the market's bearish. Now, when it's bullish, it's like, well, it's still a good deal. It's going to go to 240. There's no way it's going to come down here. I missed it. When should I buy now? When should I buy now? And this is what I get every single day. You have to decide what's best for you. Could this stock come back to something like the 50-day moving average, this yellow line? I mean, it certainly could. That's $184. Is that possible? Could it come back to 150? Yeah, sure. I mean, earnings miss, the market sells off. We go into a recession and the whole market sells off 20%. Well, this is going to go right back down to these low levels again. The thing is no one has a crystal ball. And this is why I'm buying all the time, and I'm buying when I think things are on sale. I'm not buying CrowdStrike at $210 a share. But depending on your situation and your portfolio, your blueprint, maybe you are. And I think if you buy it at $210, it's probably going to be worth more in 5 years. But there's a good chance that it's going to have a significant pullback. And if you're one of those people that don't have that financial education that we teach in Fired Up Wealth, you don't have that psychology, well, then you're going to panic sell and you're going to buy high and you're going to sell low. And that's what happens to retail, rinse and repeat. So do I like the stock? I like it a lot. It's one of my favorite stocks. Are there risks? Absolutely. Is it cheap? No. But if you look at the metrics, it's not astronomical either. Does that mean I would go buy it at $210? Me personally, no. I think it's more of a hold. Will the stock go higher? Probably. If it consolidates, probably 220 to 240, but I'm not buying off that. I'm not trying to buy off that momentum as a hope or a possibility. And could it pull back? Sure. 200-day moving average is $150. Your guess sometimes is as good as mine. More than likely, it's not going to go to $150, but could it happen? The answer is yes. So in the end, always do what's best for you and your money. I hope this video is helpful. If you're new here, subscribe to the channel, click that bell for notifications, drop me a like, drop me a comment. Have a great rest of your day. Take care.